It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, we're back after our Christmas break, Series 28, Episode 3 in the aggregate. IPO-VID Episode 165 starts here. And the big story of the festive season in the world of exchanges was a firm home roost repo by the ASX chickens. The antiquated chess system, yet to be upgraded, had a huge outage, bringing Australian settlement to a halt. ASX is now so deeply discredited, their C-suite would experience a rise in user confidence if they employed Justin Trudeau. Meanwhile, in Big World, the way to compare-contrast the Trudeau leadership of Canada may be in comparison with the nation's greatest sportsman. So, therefore, what do we have? Well, of course, Wayne Gretzky, the famous king of the ice skate to where the puck is going to be, not where it has been. What would happen if we asked Trudeau the same question? I reckon we'd hear, well, it's clearly important to bear in mind the position of the puck, given pucks are often the target of violence by off-duty truckers. It's clearly this is a minority which has been poorly treated. Many people overlook the rights of pucks, especially if they identify as, well, you get the gist, ladies and gentlemen. Farewell to him. I still don't understand how you managed to get a whole month off for Parliament just because you're going. And finally, in this introductory segment, let us remind you of a parish note. This Thursday, US markets will be closed for the funeral of President Jimmy Carter. That comes 102 years and 2 days after the New York Stock Exchange itself was also closed for the funeral of President Calvin Coolidge. R.I.P. Jimmy Carter, a man who truly had an incredible legacy out of office, much greater, arguably, than that he had in it. Our guest today, ladies and gentlemen, we are talking about building the dream exchange with Joe Cicala. Joe is a founder of Archipelago. If you don't remember who Archipelago were, well, they were the people who powered the New York Stock Exchange into the digital world. The sleepy old Wall Street giant famously reversed into the Archipelago enterprise, an electronic upstart market that was there in the forefront of the capital market revolution around the turn of the century. When that platform merged into NYSE in 2005, it powered forward the whole story of the New York Stock Exchange from a floor to the future. Joe's career has been a very varied one, embracing civil rights litigation, the US Army Reserves, and in recent years authoring the Main Street Growth Act to bring what I will call SME exchanges to the USA, and Joe will contradict me in a moment with his preferred American jargon. Joe is co-founder and CEO of a very, very exciting new venture. We've been covering this in Exchange Invest over the course of the last couple of years. Really, really intrigued to see how this goes. The Dream Exchange, which is aiming to become the first venture exchange in the US, to use Joe's preferred verbiage, as well as the first Black-owned national market system stock exchange in US history. Wow, what an interesting show we have, and it's the first of the year. Joe Cicala, welcome to IPO-VID. Where in the world are you today?
Well, we're in Chicago. It's 11 o'clock in Chicago. After all your time.
Good morning. Yes, absolutely. I'm sorry, you're just behind us. I'm sitting here in the lovely sunny environs of the Turks and Caicos Islands today. So I think we're slightly contrasting with the cold snap you're getting in Chicago right now.
It's 19 degrees in Chicago right now. It's not Turks and Caicos. So
no,
Patrick, for having me. I really appreciate you putting me on.
It's a joy to have you here, Joe. We're really, really interested in this whole story of the Dream Exchange. We're going to get on to that in a moment. But I mean, tell us, what an interesting career, civil rights law, Army Reserves, being a co-founder of Archipelago. How did you get into financial markets in the first place?
I like to say I Forrest Gump my way through my career. But financial market, I was a CPA and I went to law school and I did a lot of transactions. I did a lot of small business transactions, a lot of capital raising, a lot of capital structuring, but really got into the public markets, as I opened my law firm, because it was a favored avenue of exit in the 80s and the 90s and even a little bit into the early 2000s. So it was a necessity to be able to take all that work and bring it into public market settings. So I've always had that background, and really Archipelago. We didn't know what we had in 1995. And so part of where I am today with the eclectic mix of my life is that we really recognize that an unintended consequence of high volume, high speed, algorithmic trading has been that the small caps and the SME market, or what we like to call the early stage business enterprises, really have been left to the side of public markets. There's a lot of private capital investing, but that is an unintended consequence of financial technology. So what I did today and why I'm here is I've been formulating a solution that could bring more small companies to IPO, which is really was the backbone of the nation for 60 years. And the last 20 years, it's been a dearth of small caps. So we had to change some federal laws, and we're in the process of doing that. That's really how I arrived, coming up with solutions to what I thought were genuine and real problems. If it's not a problem, it doesn't need a solution. But we do need more small companies in public capital markets. I think everyone agrees upon that. So I've been working on that solution.
That's fascinating. So the genesis of this process, you came up with the Main Street Growth Act. So tell us a little bit about the story of how the Main Street Growth Act came to be.
Yeah, the Main Street Growth, it's a wonderful piece of legislation. It doesn't cost the government a penny. There was a lot of research in 2009, 2010, because I think the entire market was saying, where did all the IPOs generally go? And then what we looked at more carefully was, where did the small cap IPOs go? And it was 10 years where in a 10-year span of time, we had fewer small caps. Well, our definition of that is an IPO raising $50 million or less. We used to have 600, 700, 800 of them in a year. We probably had maybe 100 of them in 10 years. So where did they go? So we started doing the research back in 2009. By 2017, we actually did a very good job. My director of research is a professor at the University of Wisconsin. And we kind of looked at what are the characteristics of success and what should market structure look like if we were to change it. And, like Mr. Smith, I started just going to Washington and meeting with congressional staff with a legislation idea that could put a small capital stock exchange in place with different rules, with different settings that could both protect the earlier stage investor, protect the small cap company, not have its revenue model concentrated solely on trading volume, but rather alternative ways, maybe a throwback to the 80s where stockbrokers earn commissions. So we crafted a piece of legislation in 2018. It was really the big draft of that legislation. We got bipartisan support. Main Street Growth Act passed the House Financial Services Committee in 2018 unanimously. It was 56-0. It also passed the House of Representatives unanimously. We kind of timed out that year because of the government shutdown. And then we had COVID, and we had all kinds of other political upheaval these last few years. The bill is poised right now and positioned to pass in 2025. We have already, it's been reintroduced, bipartisan. Both sides of the aisle like it. The only difficulty we've ever had is that it's only a 12-page law. So it really requires Washington has an expression, these smaller laws have to be attached to a vehicle upon which they can ride. So that'll be our story this year, which is once the bill is sufficiently agreed upon, finding a way to make a larger legislative bunch of laws attach this 12-page securities law to it. So we're in quite good shape, better than ever before, in fact. And that is not a statement of the political climate of the country. It's just we've spent so much time invested in showing the research, showing the data, showing what's possible for the country if there are more small caps, that we've got a very broad base of agreement. Congresswoman Maxine Waters loves our legislation, as does, the new chairman, French Hill of the Financial Services Committee, from different parties. But everyone agrees small businesses need capital. The public markets are a viable solution. And the bill actually performs well to solve that problem.
That's phenomenal. And it has to be said, I think certainly some of the members of the younger generation are probably rushing out to their dictionaries or looking up online what that word bipartisan means, Joe. It's a sad reflection of the last, I don't know, 4, 8, 10, 12, 20 years, all the way back to pretty much about Bill Clinton, I think, since we've heard that being whistled around a lot. And it's great news, as you say, to see French Hill and Maxine Waters agreeing on something, which, let's face it, fundamentally, as market structure guys, we know they should agree on, because this is all about making jobs, creating business, creating investment, and helping people build a better America and a better world with it. And I applaud you for that, because I really felt for you during COVID. I mean, that must have been so frustrating, because you had the Main Street Growth Act ready to go, and then you were dashed because of what went on then. The last 4 years have been what they've been for various multiplicity of reasons. So you're in a great position now with this ready to go. And alongside the Main Street Growth Act, I mean, just run us through very quickly. I mean, you can do very quickly, because I love the idea of 12-page bills. Gosh, I wish we could have more of those around the world. Your 12-page bill. It enables companies, you mentioned the IPO kind of threshold. What's the whole idea behind what a venture exchange should look like?
Yeah, what do venture exchanges do? I mean, there was a lot of debate even whether to call it a venture exchange, because some people think, oh, venture capital. It's nomenclature, but what does it do? Well, it does two primary functions. The first one is it authorizes a new type of stock exchange called a venture exchange. And with the authorization, now, a stock exchange is really a set of rules. That's all it is. It's the rules by which the game of forming capital and trading stocks occur. Well, this gives a new type of stock exchange the ability to customize and fashion rules that are different and don't have to operate in exactly the same way as the large national market. We still have to follow all the national market rules. On the other hand, there's an opportunity to fashion lower thresholds for what the market cap of the company is, significantly lower threshold on what the meaning of the criteria for success is. So we've done years of research. Actually, our research is published in Oxford University's Handbook on IPOs. It's chapter 9. And in that, if we can fashion an onboarding of small public companies using new rules with a defined set of characteristics, we can get very successful earlier stage smaller companies. The other main feature of the bill is that we have not reduced or eliminated a single investor protection. So we've just defined what a venture security is. These will be different securities. And the securities, the issuers, will have to comply with the rules behind what a venture security is. And the nice feature, the really wonderful feature of the bill is it gives regulatory oversight of that market to a private stock exchange. We're a private exchange, which means that any abuses, any bad actors, any someone who's a promoter who's behaving badly, we have instantaneous ability as an exchange to regulate the market, which in the over-the-counter market, that doesn't exist. Mm-hmm. It certainly doesn't exist at all in private markets. So it's an added layer of trustworthiness. And that's the real linchpin of all public capital markets. No one is really questioning whether the bid and offer price for Tesla today is correct. Why? Because you have a national market system. So in the smaller settings, valuation and pricing and trading rules and short selling and the ability to monitor the market without an exchange vehicle is really missing. And we had that for 70 years. And now we're restoring it, and we're going to restore the profitability to small capital stock brokerages and enable liquidity to come into a market that really doesn't have any secondary liquidity at all. There are a lot of private companies. There's billions and billions of dollars going into private capital formation. But the ultimate question that investors always ask is, how do I recover my money profitably? Well, if you're in a public market, you can sell your shares for any reason or no reason at all. And that's the real two parts to the bill: creating a venture exchange, creating venture securities in a very trusted exchange environment, following what are good rules. There are very good securities laws in the country already, and we have to follow them. We're just bringing the bar down, which brings the barrier down, so more capital can be formed, more liquidity can be granted to small companies and the small cap investor. The expression I never hear anymore, which I heard throughout my career, early career, was, would you like to get in early on this IPO? So that's where wealth creation and communities can be built around a headquarters of a public company that expands and grows. So that's really where we've been able to get our kind of a foothold in the Congress, because everything I'm saying is both parties agree is beneficial for the whole country and the small business.
That's marvelous. It's really, really fantastic. Now if we may, for that segment of our audience who themselves are supertastically nerdy about exchanges, like myself, and indeed like your good self, Joe, how does this work then in operation? You mentioned the fact that you are effectively, the exchange is its own essentially self-regulatory organization. You're going to be regulated how? You regulated straight to the SEC or to FINRA, or how does that work?
We're regulated straight to the SEC. So it's a full
NMS.
It's a full NMS. So we will also, we're in the process right now, actually waiting any day to hear. I say any day, I'll probably get myself in trouble, but we're about to have our national exchange in the public register.
Right.
Once in the public register, we can take what we've built and what we've used there, and there's a more simplified application for a venture exchange. So if you're already a national exchange, to become a venture exchange is an easier process. You could hypothetically build an entire exchange and only be a venture exchange. So in that sense, it's a full-blown Section 6 stock exchange that is directly regulated by the SEC. And with those obligations, clearly the obligation to police the market is one of the main functions of exchanges. And this in this setting, it's very helpful at the small exchange level to be a real bona fide national market exchange with all the rules attendant with it.
That's phenomenal, really phenomenal. Let me ask you another question, though. Therefore, it sounds to me, if you're a full NMS exchange, even if you're going to be operating in this smaller category, it must presumably be very expensive to get yourself that NMS position and have lots of minimum capital, et cetera, to be an exchange.
Yes, I can tell you that we have been constructing the electronic national market exchange and the rules. I mean, our application, our Form 1, was approximately 4,000 pages. So, no, market entry for lots and lots and lots of venture exchanges is unlikely. There'll be a few of us. I know the NASDAQ is intending to open a venture exchange. So it's not like creating a meme or an app and just putting it out there. It's quite an onerous climb of Mount Everest to become a stock exchange and have that power as an extension of the regulatory authority of the SEC. On the other hand, the benefit of that is once completed, and it has been expensive and time consuming, but once completed, stock exchanges have been around in the United States for 230 years, and they work. They've always worked. And with that tool, I think we'll be, as an exchange, quite profitable. And also, this is what's very important to me, that we're actually addressing in our brand the problem that we've set out to resolve, which is small companies that are in the unlikely circumstances, not just Silicon Valley, but I call it the Rust Belt of the Midwest. There are a lot of very eligible companies that, if they're introduced to our environment and they can comply and apply and become part of the landscape of public companies, we're really putting liquidity into an environment where there's a tremendous amount of job creation. There's a tremendous amount of bank security, because once a company's public, it has all kinds of different capabilities that relate to lending and borrowing and debt. and it has governance and independent governance. So there's all these features that, while they might seem like, oh boy, we've got a lot of compliance, well, that compliance, in fact, is what puts the stability long term of those enterprises in place. And without the marketplace, no stock exchange, no companies. So this is really the first step on what I think is the birth of a brand new industry in the United States for many, many decades to come. So we're excited about that part of it, which, you know, and I don't know the sophistication of the audience, but here's a great example. Because we did a pilot, and we took a company and we got it fully compliant, and you know, it went public on the OTC markets, and it was only there for 18 months, but it's been on the NASDAQ for 13 years. It's a very small company. Some years it's hard for that company. There's a lot of trading volatility. There's a lot of, you know, you're in the market, you're in indexes. So in our environment, it'll be a different index. In our environment, it'll be a different trading environment. We can alter the tick size. So we can lower the volatility because we can customize a tick size for a company where it might be a nickel a share as opposed to, you know, half a penny.
Right.
That'll reduce volume and you'll get a true investing marketplace. We can also alter the trading hours. So we don't have to have continuous trading on our venture exchanges. They may trade 2 or 3 times a week.
Yeah.
That slows down the volumes, but it also makes for a more deliberate decision on what the investment decision is. It increases the retail marketplace willingness to participate, because a retail investor in this market isn't necessarily just going to be competing with a high-speed algorithmic trading environment. So more capital will come in, more retail investors come in. It's a safe marketplace. More capital is formed for the small caps. And when they graduate, there's a limitation. Once the company has a $2 billion market cap, it has to graduate to the national exchange. So it truly is, by law, a small cap environment. And the volumes there's limitations on volumes. You can't be more than 75,000 shares in a 60-day average. So if you're above that, you have a year to examine whether or not you're going to be compliant. And if you're not, and you're thousands and thousands of shares every day above that, you'll have to graduate. So the fact of the matter is that our new structure is really something, it's an idea whose time has come. The country needs it. And obviously, we're working in a minority marketplace. We're aware of 200 eligible minority businesses that could come to the public markets. That's a main feature of our brand. So we solve a whole myriad of issues, and I guess what I would say is the ripple effect of the societal issues is what we're interested in. Job creation, stable companies, stable communities, because when that happens, a headquarters of a public company in a community stabilizes the entire community. It isn't just the jobs at the company or the vendors at the company. It's the ripple effect of, look, find me a headquarters of a public company and I'll show you thriving auto dealers and realtors and home ownership and toaster oven buying. And it just creates an entire stability for a community, which I think our country really needs. We need to have prosperity in the middle class and in the middle market. Small and medium-sized enterprises are the backbone of the country, and we really need to support them with capital and liquidity.
Fascinating altogether. And so just to finish the nerd out on a very simple point, therefore, you're a Reg NMS exchange. So even these venture exchange companies, they're going to settle into DTCC like the larger public companies?
Yeah, we'll settle into DTC. We still have to have best execution. We can't choose a price that would be not the best price. We will have a complete, depending on whether CAT survives, we'll have to comply with consolidated audit trails. The companies will still be required to comply with Sarbanes-Oxley. Well, some of them, that's the thing. At the lower tier of the market, the lowest trading tier is the equivalent of a Reg A Plus offering. So that's a relaxed reporting requirement. But as long as they're complying with the requirement, that relaxation is available to them today. It doesn't change it. On the other hand, as an NMS exchange, we absolutely have market surveillance. We actually really have all the tools of the national exchange available to the small cap environment. And the nice thing is, because we're doing it anyway, and we're only adding the tier with customized rules, we can easily comply with NMS and have the full body, SCI, all the regulations that would apply to a national exchange, apply to a venture exchange, with the exception of the carve-outs that are in the legislation that let us function to protect the small cap investor and small cap company. So that's the purpose of the legislation. Without that, we're kind of hamstrung by NMS rules that don't allow for the small caps to enter the market and be protected, because we don't have that obligation, neither does the company. So it's a very modified, geeking out way of just editing a little bit of what the NMS system is to welcome the small caps to a cloistered environment.
That's really, really fascinating altogether. And I have to say, quite incredible how much of this you've managed to get into just a 12-page bill. It's quite an achievement. You may have a second career after the Dream Exchange in writing legislation and trying to help along the world's regulators. I'll never forget my lawyer in London saying, oh, yes, you know what, go and read that act. It's the Partnership Act, because it was written by the Victorians and they actually knew how to write laws, unlike the current rabble. Yes, quite incredible altogether. Now, I'm with Joe Cicala today, ladies and gentlemen. We're talking about building the Dream Exchange. We've been looking at this incredible new piece of legislation that's hopefully coming this year in the US with bipartisan support on all sides, that's going to give us the new national market exchange, which will enable venture exchanges within the national market exchange system. That's really, really fascinating. In the meantime, let's just bring you, as Joe has a rest, we're going to talk about the Dream Exchange in a moment, but we'll give him a chance to have a brief drink of something refreshing to keep him going in the late morning in Chicago. Let's look at a video, ladies and gentlemen, and, well, consider a very, very interesting, exciting and wondrous event that was taking place, building through the course of 2024, that put smiles on all of our faces. And that, ladies and gentlemen, was the best day ever, July the 5th last year. Just think, if you're a small enterprise, somewhere in Chicago, I do believe they're going to be building a fantastic balcony where you can go and ring a bell as well in the near future when you go an IPO on the Dream Exchange, which brings us back to our fabulous guest today, Joe Cicala. Don't forget, ladies and gentlemen, if you want to talk about, read about, hear about, or engage with the discussion at the forefront of what's happening with venture exchanges and everything else in the world of market structure, then you want to be reading Exchange Invest. Go to exchangeinvest.com, make it your New Year's resolution, support these videos, and buy yourself a subscription and stay ahead of everything that's happening by reading the Exchange of Information, Exchange Invest. Now, back to Joe Cicala, our fabulous guest today. We've been talking about this Main Street Growth Act, which is such a compelling proposition in just 12 pages, sitting in Washington, D.C., presumably sidling up to the other bunches of paperwork and saying, hello, would we be good for an attachment? And I don't know what you do. Maybe there's something like Tinder for bills. I don't really understand. Anyway, less of my legislative knowledge. Joe, let me ask you a question. We've talked all about this wonderful organization. You've mentioned it in passing, the Dream Exchange. Now, tell us about what the Dream Exchange is, first of all, and then we'll get into its genesis.
Right. So the Dream Exchange is a national market exchange in formation. We're very close to being, I guess, would be the 8th licensed NMS exchange in the country. And we're a direct competitor. We'll have all the usual suspects as our members, and we'll be handling the traffic of large cap, high volume trading, just like everyone else. We also have a separate program that will welcome large cap IPOs. So we're not saying no to that market either. But it's a second phase. And really the main phase is the Main Street Growth Act and the Venture Exchange. And that was primarily the birthplace of what we're trying to solve. And the brand itself, really looks at a lot of research. We tend to be a little geeky on our research. And the big research that I already mentioned it, the decline of small cap IPOs, that's one thing. But when you overlay job creation, you start looking at whether or not small cap IPOs are beneficial to the economy, to the marketplace. It's clear that they are. But more importantly, and this was an accident in the research 14 or 15 years ago, which is there have only been 12 what you would consider minority business enterprises to ever go public. So in the history, 230 years, we've only really had 2 minority business enterprises to be listed on the New York Stock Exchange. Now, there are thousands of them. We're aware of many, many extremely good small businesses that are in minority communities. It's not only minority communities, we call it the underserved marketplace. There's an entire tech park in West Virginia. It's not as though Silicon Valley or venture capital or private equity is flying in there every day to create liquidity there. So we're a market niche for the underserved marketplace. The companies that are really stable, and actually a lot of these companies are, when we say early stage, public, it means they're in the early stage of being public. It doesn't mean the company is a concept company or a VC company out of a drawer. But for example, our pilot was a company that had been around for 90 years, but they were an early stage public company. They were new to the public markets. They weren't a 200% or a 300% internal rate of return, but they're stably about 12 to 15%. And now that they're in the public capital markets, and for the 12 years they've been there, they've done nothing but expand. So this is the main thrust of the brand of the Dream Exchange. And the minority marketplace is hungry for this. Actually, there's more minority retail investing, and it's a huge market of interest in startups and things of that nature. But also, there are many, many, many established long-term companies with products that have been out there for decades that could really use some public capital, would be a good part of the public landscape. They're in communities where you don't have a public company headquarters. So our brand is dedicated to more than just the capital formation. It's dedicated to really creating stable companies in communities that have not had a large headquarters of a public company. And with that, we have done all the research to show that when our brand is successful, and I want to say when our brand is successful, it really has a societal change. The reach of the public capital market is very important in that community. That was one main thrust. Now, the other main thrust, and this is perhaps where the research on characteristics is most important. We cannot lose the early stage company that has the best ideas. Apple Computer was born in a garage. Microsoft was a $61 million IPO in 1986. So small public markets have given birth to, Apple is a $4 trillion company. So we have to cultivate the innovation. And this is even more broadly purposed in the Dream Exchange, which is that we believe that products and services that increase the ability of humankind, of people to survive, are products and services we need to invest in. We need to keep capital flowing into those companies, and usually they're very small. And the usual nature of it is they need some capital, they need time, and they need to expand so that those ideas can be adopted. Those characteristics of a company, we refer to it as a pro-survival company, something that will help all of us. Perhaps it's in a lab somewhere. Perhaps it's a new biopharma company. Perhaps it's a new innovation that will help wireless communication. But if you think about the last 120 years, 125 years, we were traveling the landscape in horses and buggies for the most part. And now we have electronic vehicles. We have wireless communication. We have all the amenities that go with, it's cold in Chicago, but I'm comfortable in a climate-controlled room. That was all innovation of the last 125 years, supported by public capital markets. We've changed the way people live on the planet because we've supported the best ideas, the most innovative ideas, usually in very small enterprises, with public market capital. So we need to continue to do that. So there's the mission, which is a societal mission that will help companies that are under-recognized and not being paid attention to in communities that have been ignored. But on top of that, a broader purpose, which is we really need innovation. We need the imagination of the entrepreneur in the newer company to have alternatives to private markets, because the private markets have enough time finding good deals. So once those deals have been cultivated and grow, they can come and get a public exit. They can have liquidity. They can become a stable company for the long term. Maybe they'll all be bought up by big companies. I don't know. But we won't lose them. And that's something that I think is at the forefront of the world. It's not just America, but I'm sure there are cell phones in England. So the innovative technologies that need to be born, that we don't even know exist yet, well, I'm smart enough to know that there are brilliant people out there who know things I don't know. I know how to function and create liquidity in an exchange environment, but the exchange environment can't lose the participation of the geniuses, of the people who have the future innovation and imagination. And really, as a side note to that, the wealth creation that comes when a retail investor can add those types of companies to their investing portfolio, and they can build wealth and directly own part of a public company setting. In the 1960s, there was a statistic that said about 65% of American households directly owned a public security. We're down to under 20%. I think it's about 18%. That's not to decry indexing or ETFs or other alternative ways to make your investments. On the other hand, there aren't indexes and ETFs for the small caps. Perhaps someday there will be. The Russell 2000 is the best case scenario for it. But what about below that? What about the company that you can make the investment, and when it does grow, it will grow exponentially in your portfolio, and you've supported something wisely, made a good investment, and you have some personal wealth. So there's a much broader mission to the Dream Exchange. And our final mission, the kind of phase 4, which we're also doing right now, is providing a lot of financial education to the marketplace. I'm on the advisory council at the University of Wisconsin's College of Business. We want curriculums for how venture exchanges work, how venture securities work. We're developing some of that right now. There's actually a Dream Exchange professor of finance at the university. So this is a long-term solution. It's not a quickie. And in fact, the legislation you were joking about it's very clean. And I think the innovative part of what we're doing is we're not making complex a solution to what I think is quite a simple problem. People need capital, they need to go public, and the securities need to trade. That's very simple. So we're a very clean piece of legislation that doesn't disperse into any other matters. Let's just put this first part of it here and get it trading. Obviously, there'll be rules and the SEC will weigh in. I'm sure there'll be all kinds of legal opinions for decades to come. But step 1, or perhaps step 0, is let's put an exchange there and start it functioning. And all of these other hopes and dreams, and when we surveyed the name of our exchange about 9 years ago now, we did a tremendous job. We had a very high profile former chief creative officer of Leo Burnett really help us form the brand, because we want to stay within that brand. We really want to be true to the goals and purposes under which we've all created a stock exchange. Because you can lose stock exchange, you can become very technical, and to get a broader audience participation and educate them as kind of a final phase of the Dream Exchange. And internally, we do a lot of training, and we'll do more. And perhaps we'll have people who work here and graduate from the Dream Exchange and go out into the world with the knowledge that we have to help, cultivate a broader marketplace that agrees upon what's needed for our exchange world, for the capital markets, and for the country.
And I think it's great. And let's also be clear. I mean, I'm teasing the rest of the body politic that they can't manage to get as much into 12 pages as you've managed to, Joe, because I think it's superb. Your Main Street Growth Act is so clear. And we have a wonderful comment question coming from across Chicago, in fact, Anne Berg, an alumnus of this show herself as well. Very thought-provoking. So your dream exchange is like an ecosystem. Bravo. Please give a specific example of a venture security. I think you've touched on that already, Joe, but go right ahead and tell us more.
Yeah, okay, and thank you for that. That's exactly the expression we use. It's restoring the ecosystem of public companies. So thank you for the acknowledgement. Venture securities do not exist today. They only exist in the Main Street Growth Act. So once passed, I can give you many examples, but let me touch on this. Perhaps this is a little corollary to your question. What is the type of company that might be a venture security? So the type of company, and we hand gathered over 1,600 public companies to arrive at the characteristics. So some of the characteristics. Number one, the company has to have a stable and revenue producing environment. Does it produce revenue? Does it have products it's selling? It doesn't have to have huge amounts of earnings. It can be a company that has zero earnings. These are going to be part of our listing criteria in the future. But is it stably selling its products? And how, with an infusion of public market capital, could it expand and make itself increasingly more profitable, expand its product line, and make it a more stable company? The company that was our pilot was a manufacturing company. They made very boring, low-tech products that are a necessity. They're actually called transformers. And I can't give you the name of the company because I don't want to promote a stock, but I will tell you they're a transformer company. What is a transformer? It's the devices between the power grid, even from the wall where you plug in your computer, and that little hockey puck between the wall and your computer. Well, we can't function without those in our society. They're needed everywhere, ballasts in lights and transformer boxes outside of buildings. So we need those products. Well, the company that had been making them for 90 years and sells them every year with low profitability needed an expansion through some public market capital. They grew their employment base. They grew their manufacturing base. They acquired several other companies. Their stock price increased dramatically, probably 4 times increase in stock price over a very short period of time. They've stably paid dividends. It's a great small company. And here's the interesting fact. The company's never had more than $130 million market cap. So if we're talking about a venture security, that's the company that will trade as a venture security. That's the company that an individual investor who knows something about it, perhaps they're even sophisticated electronic engineers who actually were very supportive of that company, ironically, but weren't investing privately. So once that company is able to get public market capital, it increased its product line, it increased its vendor relationships, it increased its customer relationships, it changed its entire balance sheet so that it could actually hold more inventory, lower its product cost. There was so much that the normal MBA, looking at a SWOT analysis of a company and seeing public market capital come into that company, it checks all the boxes for expansion. And then the company survived. It actually survived through the economic crisis in 2009, 10, 11. And not only did it survive, but it expanded its headquarters, it expanded its plant. It probably put a couple hundred more jobs in place than would have been there had it not been public. In fact, I'm convinced that had it not been public, it probably would not have survived the economic crisis of 2008, 9, and 10. So you can see that that's your typical venture security. Those are the companies we're looking for to add to the menu of listed companies in our venture exchange. And there are hundreds and hundreds and hundreds of them, if not thousands of them. And we're going to be cultivating that market later this year. We have seminars we're going to produce so that small CEOs and small companies can actually be educated in what it means to be compliant, file documents, and regularly report their disclosures as a public company. So the cost is reduced. The more familiar they are, the less legal expense, the less accounting expense, the less internal compliance expense if they know what they're doing. So a venture security is just a company like that. There are mechanics in the bill that describe the 3 tiers. The tier 1 of venture security is what you would consider to be a normal Form S1 brand new public company, fully compliant, and maybe they're raising $100 or $200 million. They can do that on a venture exchange. Maybe their value is lower. Maybe their profitability is lower. They're not eligible for a national exchange. So that's a normal Form S1 filing. Tier 2 are emerging growth companies. It's the exact same law around emerging growth companies, but the feature is standard filing, although an EGC, emerging growth company, they can do a SPAC, they can do a PIPE, they can do a reverse merger, they can do a direct public offering. All of those can be done on a venture exchange, which doesn't require persuading a large institution or an investment bank to underwrite you. So as long as you're compliant, you can go to the market and you can be an EGC and you can actually test the market confidentially. That's the nice feature of EGCs. They can go out and confidentially file, and if it looks like it's a viable capital raising solution, they proceed. And if it's not, they can withdraw and do it later. And the third tier is what are called Regulation A plus, Regulation A, the former Regulation A, because once a venture security, they're no longer a Reg A plus Reg A security. They're a venture security. They're on an exchange, which they're not eligible to do today. And those are very small offerings. Those might be offerings as little as $5, $7, $10 million. But the nice feature to the third tier is there's a graduated scale for small public company reporting, which doesn't hit them with a lot of expense. So the compliance is still there. It's the same compliance that exists today, with one exception. Once you file as a tier 3 venture security, you have a low cost reporting requirement. However, you now have an exchange, best bid, best offer, liquid capital market for your Regulation A securities. I expect to see a lot of applicants in that third tier category. It's the easiest to comply with. It's usually the amounts of money that are needed, which is, between $5 and $50 million in a public market, and really gets the energy into the company. And that's really what capital is. It's a form of energy. And if you use the energy properly, the company expands. Not all, just to say this as well, not all these companies will be wild successes. It's a stock market, and it's like any other market. There'll be good companies, there'll be not so good companies. But what we're doing, and this is actually out of the mouth of Congresswoman Maxine Waters. She said to me, I'm sure this is a good idea. And the reason I'm sure is because I think it will ultimately help a lot of people. And I don't know how well it will work. I know it will work. And I think you deserve a chance, which is exactly our brand. What we don't know is how well the company will do or won't do, but they deserve a chance. They deserve the opportunity to reach the public markets, and really in a secure and a safe environment where we can graduate them to the national market and add more public companies to the large cap markets. So I hope I answered your question. I probably maybe I went a little bit off of where you were.
I think you more than answered the question. I think you added to it as going along. And actually, you hit me with something that I was thinking about as well, which is the whole conversation. We've sort of framed it around the idea of bringing companies to market, raising capital for them as a one-off and so on. But actually what you get with the transponder company is demonstrating, and I think Anne will have acutely noticed this, thank you very much for the question, Anne Berg, that whole fascinating issue of following on, getting small rounds done, getting raisings for companies that are in existence, because one of the biggest problems at the moment is you can be a semi-medium, you can be quite a large private enterprise. If you suddenly decide you need money very urgently, you've got a choice of the bank or potentially very, very rapacious venture capitalists who are going to sense blood and therefore going to seek to eke out an absolutely stunning deal to their advantage rather than overall something that's balanced to the company. Whereas in a public market, if you can say, look, we're already worth whatever that is, 120 million, that's a great company. I mean, it's a fabulous company. We're just kind of blunted by the fiscal pornography of, as you mentioned, $4 trillion Apple and the Magnificent Seven and all of these other incredible super liquid companies, which are amazing. But I mean, $120 million company, particularly if it's in a small town somewhere, wherever, can be a huge employer and a huge catalyst for that local market.
Small border towns in Texas benefited from that company, and you're absolutely right. The fact is, it's a very interesting kind of, you have to almost get exterior to the current market environment and look at it from a different angle. And that the angle that we're looking at, and it really is an important angle, which is, well, I don't have $1 billion IPO, but there's thousands of companies asking, what about 50? I could use 50. So that really does change the landscape if we're able to get them to participate.
Yeah, and I think one of the big failings in a way of the modern success culture is to think that unless you're a unicorn, you're a nothing. Whereas in reality, if you're the company that employs whatever 2% of the local town, then you're making a serious difference to the ecosystem of that town. You don't need to employ 60. It doesn't need to be a company town. If you can employ 1 or 2% of the people, you're making everybody in that town materially better off.
Yeah, it's exactly the kind of, I would say it's an idea whose time has come, and we keep kind of maybe touching around it, but I guess dead center of what we're saying and what I'm saying, and I think I get a lot of agreement on this issue, is we need to trust the companies. We need to trust them, and when the alternatives to venture capital or private equity or the bank are needed. And, in some respects, let me even say this, it's not even an alternative to a venture capital or private equity deal. There are a lot of VCs and private equities firms that support this because it's their liquidity as well.
Yeah.
They may have portfolio companies that are doing quite well. They're stably giving them a return. But if they were to get public market liquidity in a low cost and a compliant way, it actually adds to the funds that might be available for VCs and private equity firms to make the next investment. So when there's a bit of competition, perhaps because the alternative is get a VC or private equity or go public. That's one way to look at it. The other way to look at it is with the billions and billions and billions of dollars that have gone into private equity and venture capital, well, where's their liquidity?
Yeah.
They have to sell the entire enterprise today, or they have to get a new fund, or they have to syndicate and get partners. It's a very labor-intensive labyrinth of trying to get liquidity from a successful VC private equity deal. And if you're the company caught in that, it will suppress your growth. But if you are in a public market setting, it changes your banking relationships entirely. You can actually do a debt offering. You can actually do another round of you take your first common round and you do another common round. And your publications are already there. It's not like you have to reinvent the wheel. Every quarter, you're keeping the market informed of who you are, what you're doing, and the investment is solid. So the quick nature of being able to go to the market and get more capital and expand, all the tools that are available. You can change your price by doing a reverse split. There's all kinds of tools available to that company to create liquidity, expand, remain stable, and be part of a community ecosystem that we currently don't have at all. So we want to give birth to this new industry.
And with that, Anberg says, thank you, Joe and Patrick, most illuminating. Thank you very much, Anberg. It comes to that point. You saw us ringing the bell earlier, the 25th anniversary of that tome, Capital Market Revolution. And we're at the point, first show of the year. Here we are building the Dream Exchange, an incredible opportunity to make American capital markets great again for the smaller and venture exchange company. Joe Sakila, let me ask you the question we always ask at this juncture. Where do you believe the capital market revolution goes next?
You know, I think we are the center mass of the target of where this revolution is occurring. I think that what we're doing is absolutely the future of capital markets. There isn't much more to be done in financial technology. There's not much more to be done. I mean, I suppose Apple could go to $5 trillion. But at the menu of capital market investing is the 2,400 most widely traded listings today. The exciting revolution, and when we say revolution, change, doesn't have to be with guns and knives. It's a change, and I think the revolution has the momentum. And obviously, a piece of legislation has both political parties agreeing that the future of capital markets is in the average retail investor who now can invest with an app on their phone. That's already there. But the menu, the choices, the democratization of the ability to go and make an investment, that's our future. And I like to say that, the imagination is the place where money goes to be born, because the most imaginative things often and almost always become worth more money. If you've got a better idea, a better mousetrap, a better solution, that's the future. And it's kind of actually been the past, but the future is restoring it to a more democratized, more free market system that allows for increased participation from the companies and the retail investing market. And then we'll see what happens with the creation of ETFs and funds and indexes and futures markets that can be based off of indexes of venture securities. There's a whole, I hope I live long enough to see how big the venture marketplace in the United States can become.
It's traditional on this show, ladies and gentlemen, that the speaker gets to answer the capital market revolution question without my making a comment. But I have to add one word at the very end. Joe Sakila, amen. So, ladies and gentlemen, that's our show for today. This has been a thoroughly fascinating opportunity to look where, well, as Joe Sakila says, we have to cultivate innovation. The opportunity for you to bring your dream to life via the incredible Main Street Growth Act, which is going to be coming to, hopefully, working its way right the way through the American political system next year when it finds a suitable bill to be attached, and has, what a wonderful word to hear once again, bipartisan support, ladies and gentlemen. Long may we hear a lot more about that wonderful bipartisan word as we go forward. You deserve a chance, ladies and gentlemen, as we all do. Next week, we're going to be on to a much more lateral thinking topic. We're going to have the fabulous Sally Bridgeland. We're going to be talking about neurodiversity and finance, something a little bit different, but nonetheless entirely linked into this whole concept. And I love that quotation you gave us at the end, the whole concept that imagination is where money goes to be born. How fantastic. Joe Sakila, you've been a marvelous guest. I'm really excited. We want you to come back when the Main Street Growth Act's there, when the Dream Exchange is up and running. Tell us. We will be delighted to have you back on the show. We want to hear about these 200 companies that you already identified that we're looking to list and see a great success, because that has got to be good for the world, because it's a marketplace growing the pie for everybody. Ladies and gentlemen, thank you very much to our team today. Thank you, Jamil, Kim, Racy, AJ, for all of your input and production behind the scenes. Thank you, Anberg, for that fabulous question altogether. We'll be back same place, same time next week. We're going to leave Joe Sakila now to go off and to redefine the wonders of the Dream Exchange and make a great input into what's going to be, I think, a very, very exciting 2025. It's morning in America, ladies and gentlemen. Thank you, Joe, for being part of the show. Patrick, meanwhile, I wish you all a great week in life and markets. My name is Patrick L. Young. This has been IPO-VID, a live stream, and number 165. We'll catch you next week. Same place, same time. Thanks again, Joe.